Hey everyone, Jason Sherman here. In today's episode of Zero CEO, I speak to CFP and author Louis Scatigna. Welcome to the show.
Hey, nice to be with you, Jason. Thanks for having me.
Thanks, man. And today we're going to talk about navigating financial success and challenges. So this is going to be interesting because of the whole thing happening in the market these days. You know, Trump got elected and then all of a sudden crypto started kind of taking off, and we see a lot of talk about bricks and gold and people kind of getting away from the dollar. There's a lot to cover in this episode. So one of the things I want to ask you as a financial professional, what do you think has happened in terms of changes in the financial market during your career that you have seen?
Wow, I've been a financial advisor for 40 years, and I've seen it all. I've lived through all the crashes. I started in 1983 as a broker.
Wow.
And been a certified financial planner and accountant for 37 years. So I've seen it all. First thing that really bothers me, the trend that we're seeing now, is people are not prepared for retirement. When I was younger, when I met with people retiring, they did not have a mortgage on their house. They didn't have car payments. They didn't have credit cards. They didn't have student loans. Now I'm seeing people who are retiring coming to me with a traditional mortgage on their house, 2 car payments, not too much money in their 401k. How are these people going to get by? I mean, you can't live on Social Security even without debt. If you have debt service and you have Social Security, how are you going to get by? So I fear that we're going to see massive elderly poverty in America. And I think that's a trend that unfortunately is unstoppable right now because too many people haven't done the proper planning. They've lived over and above their means, and it's going to be a big crisis in America.
You know, you bring up such good points. I've been seeing it myself. I mean, a lot of people are attributing it to the fact that inflation has just kind of completely decimated their chances at saving money because, you know, if you're earning, say, $25 an hour at a job, and you're trying to, you know, pay your rent, which is now $2,000-$3,000 a month instead of what it used to be, $800 a month. How do you survive? So a lot of people are complaining, saying, well, I can't save and I can't do retirement because my expenses are higher than what I make and I'm just kind of just getting by. What would you say to those people?
You have to really examine your priorities. People come to me in their 50s and they say, Lou, I got to start retirement planning. I'm getting old. I should have done it years ago. We make good money, my wife and I, but it seems that we can't put anything away. The question is, where does your money go? Let's look at it. And then you find out they both have car payments of $600 to start off with. They have a big house with a $4,000 mortgage. Maybe they have college debt because they put their kids through college. So yeah, you can see where your money's going. How many vacations do you take a year? You know, all this stuff.
Those are expensive,
remember,
yeah.
Everything's expensive. It all adds up. So if you're in your 50s and you haven't done enough retirement planning, unless you make severe cuts in the way you live, maybe downsize your home, maybe keep your car until it dies instead of getting a new one every 4 years, right? We could spend a whole show just talking about, you know, how people fail financially. It's cars and homes. It's really that simple. You know, it's buying the wrong size house, buying the new cars every 4 years. And
hey
how
man,
you finance
I have a
those.
2013 Nissan Rogue. It's paid off, 60,000 miles. I'm gonna ride that thing till it dies. So I get it.
I could buy a new car every year if I wanted to. I don't.
Right?
I
would
follow
you?
my own advice.
You're gonna lose 30% of the value right off the lot anyway, right? So what's the point?
And I don't buy new cars.
Yeah,
right?
It's not worth it.
I go and buy 2-year-old cars,
2-year-old.
25,000 miles on it. Let somebody else eat the depreciation. In my book, I have a whole chapter on the right way to buy cars and why Americans have no net worth.
Let's talk about inflation for a minute because that's like a hot topic these days. And people are saying, Jesus, the inflation doesn't stop. Everything costs more money. And they think maybe the next administration is going to fix it. Who knows? But let's talk about inflation and why it's not going away anytime soon and how people can potentially mitigate it or prepare for it.
Inflation is not going away anytime soon. As a matter of fact, I think it's going to get worse in the years ahead.
Oof.
And it's simple. If you just look at economic history, I mean, when a country goes into substantial debt, substantial deficit, monetizes that debt through printed money, it always ends badly. It ends in inflation, hyperinflation, currency collapse, and third world status. It's happened to every empire at some point. You know, you can go all the way back to the Roman Empire. On my radio show, I talked about the Roman Empire inflation, the hyperinflation, the Weimar Republic in Germany, Austria in 1946, Zimbabwe, Argentina. It's always the same recipe. A country becomes very strong. They have a good manufacturing base. They project their military might around the world, right? Then finally, that military might becomes very expensive. The people in the country want more and more from government. You go into deficit, and then you start borrowing money, and then you eventually start printing money to finance the deficit because nobody else wants your bonds, right? And it ends in currency collapse and hyperinflation. Now, the reason it hasn't happened here yet is because of the international reserve status of the U.S. dollar.
What
People
happens?
need
What
dollars.
happens if that doesn't exist anymore?
The currency collapses. Maybe not overnight, but it goes down because the demand. Look, everybody in the world needs dollars. You can't buy oil for the most part without buying dollars first and buying a barrel of oil. This is what Henry Kissinger did in, I think it's 1971 with the Saudis.
Yeah, but
We will protect
the
you.
BRICS are challenging the U.S. dollar. I'm seeing it in the news nonstop. So it doesn't seem.
I talk about it a lot on my podcast.
What do
Yes,
you what do you talk about in terms of the BRICS challenging the U.S. dollar? Because I see it in the news every day.
well, because they want to set up their own currency. They're sick of the United States telling them what to do. They see that what happened to Russia as far as their dollar reserves being frozen and the interest being given to Ukraine. They don't want that to happen to themselves. So they're going to form their own currency or just trade with each other in their own local currencies, which is what they're doing now. All right. But then Trump came out this past week and said, if you challenge the dollar, any country that does that are going to get 100% tariffs on all their goods. So we'll see what happens with that. That's not something that's going to happen overnight, the BRICS and their currency and their challenge to the U.S. dollar. But the U.S. dollar's domination is being chipped away at and its reserve status every single year. And now it's, I think, 60% of the reserves around the world are U.S. dollars. It was much higher than that just 10 years ago. And I think that's going to continue to occur, that they're going to try to get away from the U.S. dollar because the U.S. dollar is being printed into oblivion.
Yeah, it's just I love the correlation people say out there who are non-believers of cryptocurrency or gold or precious metals, and they say, it's fake. It's fake money. It's whatever people believe it's worth. I'm like, well, what is printed paper? What is fiat currency? Isn't that just printed fake digital numbers and people say it's worth money, but really it's like you just said, it's printed into oblivion. So why is that worth money? I guess it's the psychology behind it, I assume. So then what that brings me to the question, you're probably a proponent for gold and precious metals. I don't know what your stance is on cryptocurrencies, but we've just seen Bitcoin historically hit $100,000 this week, right? And people, I remember when it was $100 and people are saying it's fake money, it's internet money, it's not going to go anywhere. Well, it's $100,000. Maybe one day it will crash, but the fact of the matter is gold and crypto and real estate and things like that should be in your portfolio to bypass this fake printed money situation, right? I mean, what are your thoughts on that?
I'm a big proponent in gold and silver, and it's a big portion of my net worth and has been for a long time. I sleep well because of it. Look, we just talked about the dollar. The biggest risk most people have is hyperinflation and currency collapse. I don't care if you have $1 million. If you have a million worthless dollars, what good is it, right? It doesn't really matter. So you need to have hard assets. What are hard assets? So anything that's real, that you could touch, you could hold. Now, I'm not a big Bitcoin person, okay? Maybe it's because I'm 64 years old and I'm too old to learn new tricks. I don't understand it and I don't want to learn about it. And I'm kicking myself every day for not wanting to learn about it and having some. Yeah, yeah. So, but I'm very comfortable with my precious metals position. I bought my gold at $800. It's $2,700 now or something like that. So it's done very well over the years for me as an inflation hedge, and it will do well for me when and if we have a major inflation or hyperinflation problem
You
in this
mentioned
country.
you mentioned you like silver also. That's something that I invested in early on as well. What are your thoughts on silver?
I think silver is going to be gold on steroids when the big move comes. Silver's been
What's that big move? What you say big move for people who don't know?
well, the big move that's going to come is going to be a vertical move in the metals. Okay, I don't want to see that because that's telling us something very bad about the rest of the economy in the world and so forth. And I don't want that to happen. I don't want my gold to be $10,000 an ounce. I don't want my life insurance to kick in either. All right. But gold and silver are financial life insurance. All right. If the
Right.
worst happens, inflation, hyperinflation, currency collapse, political unrest, gold and silver are the go-to places.
Yeah.
Now, talk about the cryptos before. I can't hold the Bitcoin. right? I could hold an ounce of gold. All right. So I don't look at Bitcoin as a tangible asset. It's only tangible if you could hold it. All right. So
Well, I mean, you can hold a wallet in your hand though, right?
I guess I
I have
guess,
a I
but
have a hardware wallet that I can plug into a computer, and then that's how
mm,
I can send it to you, or use a computer phone wallet as well. You can also hold a machine that makes you Bitcoin, right?
yeah, I guess you could hold the mining machine.
The
Uh,
machine,
but
yeah, you can
but
hold it.
but the bottom line is when the power
I
goes
get what
out,
you're saying.
when the
I-
power goes out, I can still get my coins. You can't get
You
your
got your
Bitcoin.
gold bar, and
That's
you can still use your gold bar. Got it.
that's right. But I really do think that silver is going to have a bigger percentage gain than gold once the train starts really moving, which I don't think we're that far away from. Uh, uh, and but the problem is you can't really buy a lot of it unless you have the place to store it, right?
Hmm.
You could buy $100,000 worth of gold, and what is it? 40 coins,
Yeah, it's a
45
couple
coins,
coins,
right?
yeah, that's
Yeah,
easy.
$100,000 worth of silver. You
You
know,
need a whole
you're gonna have
room,
to take your walk-in closet and make it a vault.
basically. Yeah,
I'm basically 90-10. 10% silver, 90% gold because I can't. I rather be
store it.
50-50. I'd
Right.
rather be 50-50, but I can't buy anymore because you can't store it, right? It's too heavy. And if you want to get out of Dodge quick, what are you gonna do? Load up your truck with all these monster boxes of silver?
Yeah, it's not going to
you know,
work.
yeah,
That
you can
makes a
walk
lot
with a
of sense.
briefcase. So,
So let's try to give a little bit of advice before we wrap up to people who, like you said, they don't have retirements. I know personally a lot of people who don't have retirement plans. I talk to them all the time, even though it's not financial advice and I'm not a financial advisor. It's just I've been doing it my whole life. Is simply investing in the S&P 500. Put your money into an ETF, forget about it for 20 years, and you'll have some sort of retirement there. What other pieces of advice would you give someone who has a good job, doesn't have a lot of debt, and they don't know what to do with their money?
well, that's sound advice. I mean, buying an S&P 500 ETF or mutual fund gives you the market in general. If you would have done that 30 years ago, no matter the crash is up or down, it didn't really matter. You're sitting here at a record high eventually. It's smart advice. And the younger you are, the more exposed to the market you should be. The problem that I'm seeing is I'm seeing people come to see me for the first time, and they're 65 years old and they have 70% of their 401k in the market, right? That's the opposite. That's being overexposed to risk, given your age and proximity to retirement. And the problem with most people is that they're not active management of their funds. They don't actively manage it, right? I saw a new client this week with a $2 million portfolio. Doesn't do anything with it. I mean, $1.5 million 401k hasn't changed anything in it in years. Doesn't trade, doesn't change allocations, doesn't rebalance, doesn't understand those things. Somebody like that needs a professional like myself, a professional money manager and financial planner to do it because most people are not equipped, educated, or have the the emotional stability to do it because, once that market starts heading south, it's easy to panic and take losses. When the market's heading up, you fear of missing out. You have the fear of missing out, and you want to buy. You're
Mhm.
buying at the top. There's an
Yeah.
old adage. I'm sure you heard it: buy low, sell high. You don't buy
Yep.
high and sell low, and that's the
Yeah.
reason why
That's the
most people
joke, right?
fail in their investing because they use emotions of greed and fear to generate what they're going to do with their investments.
That's why I always tell people, like you said, it was good advice to just put your money that you can afford every month into the S&P 500 ETF. Forget that it exists. Watch it grow, but don't worry about those dips and green candles because you're going to see it, right? I zoomed out recently to show my one friend the S&P 500, and I showed like, look how it goes up, and then look how it goes down. Look how it goes up again. Look how it goes down. But then look as it continually trends upwards to the right. Like even though it goes down and up and down and up, it's still always going to trend upward. And that's the thing I always try to tell people is if you invest in the market, it generally historically always trends upward. Is that correct?
Yes, and the reason is inflation. What you're looking at when you look
Okay.
at the stock market is you're looking at inflation, right? A share of IBM costs more dollars now because the dollar is worth less. Not only does it buy less groceries and stuff like that, it buys less shares of a company. All right. So
Right.
it takes more units of currency to buy that same shares. So, in Weimar Germany, when the hyperinflation was crazy, their stock market went to infinity if there's ever such a thing. All right, because the Reichmark disappeared. So how many
Right.
Reichmarks that are worthless does it take to buy a share of a stock?
Right.
So the stock market going up over the last couple of years is a symptom of inflationary pressures. And
Awesome.
that's the reason we saw gold and gold go up as well. Bitcoin, it's all inflation.
It's all inflation. Let's see if the silver bugs win in the end, and hopefully crypto keeps going up. And same with everything else, right? We don't want to see that $10,000 gold ounce, like you said. This is fascinating. Thank you, Louis. Where can people find out more about you and your business, and if they want to hire you as their financial planner?
All right, first of all, my podcast, my book is thefinancialphysician.com. Thefinancialphysician.com. We have all our podcasts there, videos, and all kinds of stuff. You could also get a link to my firm. I'm president of AFM Investments, which is a 37-year-old financial planning, investment, and tax firm. And
Awesome.
you could find us at thefinancialphysician.com.
Guys, check it out, thefinancialphysician.com. Louis, thanks again. Hope you guys learned something about your investments and hope you start investing. And we'll see you guys in the next episode.